live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, highly anticipated edition of the day trading program brought to you by reallifetrading.com. This is module number 2. Folks and friends, team and family, fans, followers, and loved ones from around the entire world, welcome and thank you for being here. Ira Weinstein, what's going on, champion? How are you? Thanks for being here. I heard you're good friends with Craig Levine. Antoine, welcome. Terry says hi. JS says howdy. Luis, what's going on? Lewis says here we go. Paige is excited. Robin says module 2. Again, shout outs to Robin Steckel for helping me with the slides. Thank you, Matt, for helping me with the technology. Thanks, everyone, for helping this all really come together. I'm just the guy who speaks. There's a lot that goes on behind the scenes to make sure all this works smoothly. And just want to say thank you for everyone who is there and assists and volunteers and helps us enrich lives, because that is the mission. The mission of this company is to enrich lives, and we do that by guiding people towards fully achieving and understanding financial freedom. That is our mission. The goal of this series, which is where you are, you're in the series, you are here. I want to help create a sensational tribe of consistently profitable traders who can carve out monthly cash flow through day trading, and specifically day trading the US market. Rich says, I missed module 1. Is there recording? It's on our YouTube channel. Just go to our YouTube, get it there, Rich. Daniel says, one of these days I will get all this learning. Hopefully I'm ready. I hope so too, man. I hope so as well. All right. Some quick things about me. My favorite time frames to day trade on are the 2-minute, 3-minute, and 5-minute. When day trading, I don't short food stocks. Random little thing about me, but there you go. I don't know why. I do know why. Over like 4 years of data, I looked at all my food stocks and I noticed that I lost on like 95% of them. So I figured, well, how about I just don't do that again? So don't short food stocks or yoga pants. That's pretty much right. Jay says, is Apple a food stock? Of course. I love consolidation gaps, especially if they occur on a 2-day time frame. So 2-day pennant patterns, when you get a nice little consolidation and you gap out of that, I love those moves. And I also dislike wearing shoes and socks. If I could be barefoot all day, every day, I would be. So those are some 4 things about me. If you want the slides, you have to text the word Newsome to this number. Put that number in your cell phone, 55444. Or if you're in Canada, that's a way to get access to the slides if you want. Chief says, aloha, made it to the second session. Thanks for being here, Chief. Always appreciate you being in the building, my dear friend. So this is where we're at. Module 2, we're going to talk about gaps and reversal patterns. Now, granted, we do cover gaps in the intermediate series, but I also realize that not everyone here has gone through the intermediate series, and you might not ever go through them, even though you should. I will say this. I'll cover a lot of very similar information that I covered in some of the intermediate classes, but gaps are so epic, especially today. Today was, if you are a day trader or a trader and you are a subscriber to Real Life Trading, you murdered it today. The chances of you making money are very, very high if you're part of the RLT community today. So good. So anyway, long story short, there was a lot of good gaps today, and we're going to talk about many of them. The daily chart is extremely important when day trading. The number 1 focus should be identify excited stocks, which would be a stock that can really move based on larger time frames. Again, this takes practice, but once you master it, you'll have it forever, because at some point you should be able to pull up a chart and just be able to see and feel the setup immediately as you look at the chart. And sometimes the weekly chart can help a lot. As I've mentioned before, my main focus is gaps above a bunch of upper and lower shadows, or below, a gap down below a bunch of lower shadows. If you're gapping above or gapping below a bunch of lower or upper shadows, those shadows are created by buyers or sellers, and therefore they're going to be a little bit trapped. So I need to have people wigging out. So if you can get a gap on some weekly charts, I love those. That's why I talked about in the last class. Gap on Mondays can be really fun. Next week, it'll be a gap on Tuesday because the U.S. markets close on Labor Day. So the gap will be on a Tuesday. But I really do enjoy these gaps on weeklies and daily charts above a bunch of lower upper shadows. So what we're talking about tonight is gap action. And gap action are crucial to our success as traders. They will help us see and find the excited buyers and sellers. Gaps help us locate momentum, and they help give us an edge. And understanding gaps help on all time frames of trading. So the more you understand gaps, the better you can trade day trades, the better you can do swing trades, the better you can do investing. Gaps are just fun for the whole family. Day trading is intended to create cash flow so you can do epic things with that money. That's why we day trade. I love investing. I love buying good stocks. I love being in things long term. I just talked to a really wonderful, exuberant young lady today. Her name was Rachel. We had a quick coaching session. She lives in Amsterdam. And I think it was like 10 p.m. when we had our coaching session over there. And Rachel has a regular IRA. She has a Roth IRA. She's in her mid-20s, and she has a regular old account. And the cool part is her regular account is much larger than her IRA and her Roth. Why is that? Because she's young, right? You can only contribute so much to your IRAs in time. So her regular account, you can put as much money into one of these as you want. But her IRAs and Roth, right, you can only do so much with that over time. You can only contribute it. There's actually a ceiling as well. Once you make enough money, that there's only so much you can do with IRAs and Roths. If you guys didn't know that, there's actually a ceiling to them as well. But anyway, long story short, she was trading in her regular account. I was kind of walking her through all the cool things that you can do. And this is a really, really great way to blend it, because you can have a regular account. You can have multiple regular accounts, right? You can have a day trading account. You can have a swing trading account. We're going to talk about more of that in the future. But in general, that's really the way a lot of this is set up. And in today's class specifically, we're going to do a lot of discussion on micro gaps. John says, random question: how do taxes work for day trading? They are taxed at short-term capital gain rate because they are short-term. So micro gaps are also known as common opening gaps. So these gaps eventually fill, but they are still super powerful to focus on, especially when a trader watches the same stocks over and over and over again. All right. So here are the 4 gaps as we call them here at Real Life Trading. I talk about this in all kinds of programs. The name and the actual terminology is relatively irrelevant. It doesn't actually technically matter. You can call them anything you want. You can call them the John Travolta gap. You can call them Cyndi Lauper gap. You call them anything. Anything you want. Doesn't matter. As long as you understand the sentiment. I will be using these names a lot. So if you want to know kind of my jargon and lingo when I'm in class or we're looking at a swing trade or we're reviewing something, my moderators, my team, a lot of the people within Real Life Trading will use these terms. So it's good to know kind of what we are talking about. You could also even call these the mashed potato dance. That's right. Good old mashed potato dance. The name is irrelevant, but I will be using them in this class. So let's talk about it. Remember, one of the very first things we want to look at and access, we talked about this in module 1, is what is the trend? So if we're looking at this stock, this is all we see on the screen. This is all we know. What's the trend presently? And I would like everyone who's here to answer that question for me. Because again, this is all, remember, this is free. I know you're spending your time to be here, but you're not spending your money. You might as well answer it. Make sure you're right. Make sure you get this stuff so you can go out and make money. All right. Everyone's saying bullish. That's absolutely correct. Well done. Okay. So this is a bullish candle, right? Would everyone agree? That's a nice bullish candle. So that candle is created from buyers. People are buying that particular candle. Now, if I'm looking at this particular chart, I'm looking at this particular candle, we know the trend is up. Do we know what color will follow the next day? Do we know? Do we have any idea? Nope, we have no clue. So we have no idea the candle color that's going to follow this particular trade, but here's what we can do. If the stock gaps up, how will most recent traders feel? So the most recent traders, like people who bought right there, will be profitable. They'll be excited. They'll be pretty fired up. And they will sell, lock in a little bit of profit, which will cause a little bit of a pullback, and then most likely a continuation. So the interesting key point to this is we don't know the candle color. The candle color does not matter. The candle color after the gap is irrelevant. It's all about what it is doing before it does it, understanding what it will likely do before it happens. Elizabeth says people might feel confident and happy. Yep, and if they do that, they might buy some more. Exactly right. So you'll initially get a little bit of selling, but it's a small gap, and the traders will feel excited. They'll feel happy. They might sell, or they might be buying more. So what this is called is a bullish retest gap. Again, keeping in mind the candle color does not matter. What's very interesting about this gap is not only did the previous candle have a little bit of an upper shadow, but do you notice how we also opened above the high of this bearish candle? So the most recent bulls, aka the prior candle, they are profitable. And at some point, they're going to sell, causing the stock to pull back a little bit, giving other people who are not in a chance to buy. This is known as a bullish retest gap. Bullish because, well, you know, it's bullish. And a retest gap because it's a bull candle gapping up. So that simply tells you, don't take a breakout when you're playing these type of gaps. Look to buy it at a lower price. Look to allow the sellers to buy, to sell, and they sell into your buying. I'll repeat that. On retest gaps, just try to buy as low as you can. Let the sellers who sell into you, and you are the eventual buyer of their selling. And it can be on any time frame you want. It can be on a short-term time frame, it can be on a daily chart, but recognizing this type of gap is really crucial because it can help you with your timing. So when you are day trading this, you are either looking to play a super quick breakout above a bear candle, right? If you are going to play a breakout and you did not get filled, you don't have to wait for a retracement. If you get some bearish candles and you're looking to get in above those candles, fantastic. Very similar to what we talked about recently. You don't have to wait for that giant retest. If you get some bear candles and those bear candles are sellers, those bear candles are people who are selling to lock in profit from the previous day or hour, and they're selling. If the stock goes higher, those sellers will be excited. They'll get FOMO. They might get back in, and that causes you an opportunity to get in bullish. Mark says you would do a stop limit on the breakout. Yep, if you're doing a breakout, you can do a stop limit. And if you're doing the pullback, what type of order would you do, John? So this will be a stop limit, and this one would be a limit. That is correct. Yep. Now here's a cool question. Could PayPal be one of the stocks that you focus on every day? And the answer is yes, absolutely. Sure it could. It has really good weekly options. It has really good volume. Does everyone here know exactly how PayPal works? You should. Does everyone here think that PayPal is going to go higher over the next 5 years? Right? Yeah, you should. So PayPal could be one of the stocks that you could just focus on every day. It could be on your list. You could watch it every single day or every single week or whatever. You don't have to scan for anything special if you don't want to. This could be one of your lists. Now, this is zooming in to that gap that we are analyzing. Does everyone understand that? Type in a 1 if that makes sense. All I'm doing now is we looked at the gap that we looked at on the previous chart. We're now zooming in to that gap on a 5-minute chart to see what happens. This is a bullish retest gap. And again, retests do not have to be very big. This was the selling at open. So when the stock opens, you initially got some selling for like 25 seconds. The buyers who bought yesterday sold. The buyers who bought yesterday sold at open. Some of them, not all of them. And that's what caused the stock to go down. And then all the people who wanted to get in and who were trapped and who were excited started buying the dip, right? That's the dip. That's the retracement. And then, blue, then it rocketed. So that is it. This little guy is the retest. That is the pullback. I know it's not big, but that's the initial short-term small retest. There are always two retests. Always. You will have a smaller one and a larger one. Unfortunately, if you're like, give me some exact details, calm down, engineers. Give me a break. I wish I could say, okay, here's the exact percentages every single time across all trades ever. Enjoy. Right? It doesn't work that way, but there's always two. You always have a small one and a larger one. Therefore, the one in the green circle, would that be the smaller retest? Yes or no? And the answer is yes. What about this blue circle? Is this the larger retest? Yes or no? And the answer is yes. Now, here's a quick hint. I'll pull up a daily chart in the future, and the daily chart, this gap fully fills. And that gap fully filling would be the larger retest on the larger time frame. This is the smaller retest on the smaller time frame in green, and the bigger retest on the smaller time frame is the blue circle. Remember, all markets are fractal. I talk about that a lot in the intermediate class and the advanced class when I do my Elliott waves. But everything is fractal, so everything moves congruently on all different time frames. So everything I say can technically apply to any time frame that you want. Pretty wild stuff. So what am I trying to say? Should you buy here, the breakout of that candle? And again, the answer is you could, but you have to remember that a retest is going to come in at some point. So you either A, hold through the retest, or B, sell it very quickly, expecting the retest to come in, and then try to buy the retest again. Right? Expecting that S curve to come in. So if you buy here, don't bail when you're a little bit underwater as it's retesting. Make sense? So if you do buy high and you're buying high on a retest gap, and you're like, yep, I'm buying high on a retest gap, and you know that, and it starts to retest, don't freak out. Now, when I say don't freak out, does that mean that it's impossible for this to happen? Of course, it's not impossible. That happens a lot. It's called trading. Like sometimes it doesn't. Sometimes this is the small retest and this is the larger retest. That's why you have a stop in place, right? Remember, this is roulette with no green. Okay, remember that. This is roulette with no green. You get to play red or black or odds and evens, and you're going to make more than you lose. Everything works, just not all the time. So this is the retest. Now, if you're wondering, where do you get in over here? Once it's retesting, okay, so once it does the S curve and starts pulling back, then when do I get in? The answer is look for reversal candles. Look for reversal candles, AKA hammers, AKA high wave candles, generally some type of bearish candle like this one or this one or this one. What I really, really, really like about this guy right here is you have a very nice hammer followed by an inside candle, followed by another inside candle. That's the stock saying, hey, just in case you want to make some money, just press the buy button after we break out, please. Right, so your entry would have been there above the high of the hammer, stop loss would have been there somewhere, and then there's the pop. So if it trade up into this resistance, knowing that it's a retest gap, could you have sold there for a relatively small gain, knowing that it's a retest gap, knowing that it most likely will again retest at some point? The answer is yes. So again, you do one of two things. You either sell there and lock in a profit, or you hold through the retest because it's a retest gap, then it bounces, and then you move your stop. So you take your stop from there and you move it there, and then you exit up here if you want, or up here, or you hold through these retrace and you exit up here. Remember, on retest gaps, you get into the bottom of the S curve, you get on the retest, and you sell when it makes a new high. That's the way wave structure works. Buy low, sell high. You're not going to get the top, so don't worry about it. Ever. You mean to tell me, Jeremy, you never get the top? Nope. I can get a few pennies away, but I never get the top. In fact, today I missed the top by 15 cents on a $200 stock. That was fun. So it's going to happen a lot. This is what the pre-market looks like. All right, this is the pre-market. So what's really cool about the pre-market and what's really, really exciting about this pre-market, what I love about this pre-market, type a 9 into the chat pane if it makes so much more sense on that retest now, looking at the pre-market. Because remember, notice this nice, solid, beautiful bull candle right before market open. There's your good close. What did the stock do based on that candle? It retraced about 50% into the body candle of the previous candle. Have we ever talked about that ever before in any class of all time? Right? Pretty much any class that you've ever taken with me about candlesticks, I talk about that exact sentiment. It happens very frequently. Right? Large candles really often will retrace about 50% of the candle, and then you can get that little pop. Matthew says, such a cool candle secret though. Yeah, man. And no one really talks about that. I think there's 2 or 3 people that really talk about that, but it's not that frequent. All right, so this is what's cool. So let's go a few days in the past. Now, let's go a few days in the future. So this was a few days after that retest gap. So what I'm gonna do is I'm gonna draw an arrow in red. This arrow in red is the gap that we were just looking at in previous slides. Type a 4 into the chat pane if you can clearly see the larger retest on the larger time frame. So this is it in here in red. What's really cool about that is there's some very, very important sentiment here, right? Because this day was a bearish candle and it was a shaved bottom candle. Whew, man. My teacher would be so proud of me, my writing skills. Do teachers teach kids how to write with mice these days? Like, this is me writing with a mouse. Maybe I should try my track. I'm better writing with a trackpad. It's kind of, I don't know why, but anyway. Okay, so long story short, it's a shaved bottom candle. Now, when you have a shaved bottom candle, that means a lot of the short sellers are already in. They sold and sold and sold and sold and sold and sold all the way to the close of the day. They couldn't sell anymore. I mean, when it closed, there was no buying at all. It was a shaved bottom candle. So you had tons and tons of selling at the end of the day. So when the stock gaps down at open, what are the short sellers going to do? Buy to close. What about the people who bought here on the gap candle and sold there? Do you think they're going to do it again? Yeah, so they're going to buy again. What about the people, let's call them the orange traders. So let's say the orange traders were sitting here. They wanted to buy right there. They saw it go up. They didn't. And now they got their chance to buy at open at the exact same price. Do you think they're going to do it? I hope so. So they're going to buy it. So you have the bear traders from the prior day, shaved bottom candle, buying to cover it open. The gap filling, let's call these the green traders. There are a group of traders that only play gap fills. That's all they do. So you have a whole, let's call them the green traders. So these guys are the gap fillers. So all they do, whole list of traders that will just do this. When they see a gap, they play the gap until the gap is filled. And then once the gap is filled, they go the other direction. Mr. Gap Fillington, that's right. So the green traders, that's all they do. So anytime they have a gap, they start shorting until the gap is filled. And once they get stopped out, they flip and then they go long again. That's all they do. They just fill gaps. Tons of traders that do that. Type in a 1 if you did not know that. I'm not saying it always works, but sometimes it does. There's a whole list of traders. That's all they do. So when you have a gap fill, this is extremely important sentiment because, again, what direction was the trend on that day at open? It was bullish, right? The trend was obviously bullish. So it was a gap down into an already bullish trend. That is a very, very easy bull fade. So a bull fade is when you play a bear candle gapping down into support and you go long. That's what a bull fade is. So that day you're day trading it bullish because of the sentiment. Bear shave bottom candle gapping down, filling a gap in a bullish trend. Get it. Let's go. You get in long. That's really important sentiment to master because that is what's called a bearish retest gap. So it's like a bullish retest gap, except a bearish retest gap. Black candle gapping down, bear candle gapping down. So you have this bear candle gapping down. You have the recent bears who are profitable, and they're going to buy it close at some point. The candle color after the gap does not matter because what generally happens is the bear traders, they want the stock to gap down overnight. They're profitable. They buy to cover, and then it does this. That's what they want it to do. But what if you form a little bit of a consolidation, you do this, you trade sideways, and then you break higher? That's a pattern that happens literally every day, all the time. Tons and tons of stocks do this. I will say, ladies, if you're listening, I've worked with probably, I mean, no exaggeration, a few thousand women over the last 11 years working with them individually as coaching students, and women really gravitate towards this strategy. The fades, girls love to fade. I don't know why, just throwing that out there. So bear candles gapping down into a nice strong bullish trend, or bull candles gapping up into a really strong bearish trend. They're really good at fading. And this is a strategy that I've seen work very well for a lot of people because it's relatively easy. I mean, just find a nice, strong bullish trend or a level that there's a very, very good support resistance, and find a bear candle gapping down into a strong support resistance like this, right? Resistance, resistance, support, 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 and then zoom in and then look to fade it. So what do you think? Could you only focus on gap down fades for the rest of your life and make money? That's all you do. You look for bear candles gapping down into support and play along. That's all you do for the rest of your life? Yeah, of course you could. Will you get bored? Yeah. Will you be profitable? Yeah. Will you come over to my house and we have like fire burning, money burning parties together? Maybe. Right? It just depends because it's a really, really good strategy. But it's the gap down, right? It gaps down, it opens, it either runs and rolls over or it doesn't and it breaks out and continues higher. It's a really, really fun strategy. All right. So I do have a video on how to trade shave bottom and shave top candles. It actually has a very high up-like dislike ratio. It's one of the few videos that no troll has ever just come in and down-liked it. And I think it's because only people who watch this video are people who actually want to trade. They're not people who are like, oh, I want to make $1 million by tomorrow so I can buy my girlfriend a Lamborghini. It's mostly people who are really looking for candlestick information, and they find this video. And anyway, I'm happy about the up-like, down-like ratio. Long story short, it's a good video if you want to watch about shave tops and shave bottom sentiment. It's really, really cool stuff. All right. Now, would you guys have fun if we went back in time and analyzed this bull fade? Type in a 1 if you would like to do that. Let's go back and analyze what this stock does and talk about it. This was the gap down fade setup. So this was the bear shaved bottom candle gapping down. I can look at this chart and I can talk about this chart for like 75 years. You should be able to print this chart out and read it from left to right like a book. I'll give you an idea. Let's start. So you have some bull candles, some small candles here. It gaps down. A lot of people are probably trapped, but you do have a load of buyers who are coming in who are all excited. So they start buying, buying, buying. Beautiful consolidation there. Boom, breakout. Everyone's starting to fade this trade, right? They're all excited about the fade. They're all pumped. And then boom, it immediately reverses and probably stops out everyone who just went long for the fade. Womp, womp, womp. That fade didn't work. Mostly because it was a bull candle gapping down, but I digress. So nice close below the bull candle, right? The bull candle, the low of the bull candle becomes an old support, new resistance. So it trades back up, hits that, fails, hits it, fails, hits it, fails, hits it, fails, hits it, fails. Trade sideways for like 45 minutes. Here's your support, all in here. Once that support breaks down midday, you also had this little trend line that broke down as well. Congruent trend line and horizontal line, both at the exact same price breaking down, free money. So short it here, stop above there, and you get a nice short move to the downside. Bunch of selling right at the end of the day, tons and tons of volume, shaved bottom bear candle to end the day. Shaved bottom bear candle. So this thing is as bearish as you can get realistically. So it gaps down. So were people still in their short trade from over here? The answer is of course. I can see that. So before the market even opens, I could pull this up and determine and look at it and visually go, yep, that's exactly what happened. People are in short, so they're gonna be buying to cover. Now, what's really, really cool is you'll notice if you tried to play the gap down fade on this day, and again, it was a bull candle gapping down, so it wasn't the exact same sentiment. Well, regardless, let's say you took this trade. Did it work? No. Let's say you lost $1,000, all right? So Elizabeth took $1,000, put it with kerosene, and just lit it on fire. You can make money every single day in the stock market. Sometimes you just make it for someone else. So Elizabeth has lost $1,000. Elizabeth is a gap down bull fade trader. So she does it again the second day. Is this the exact same pattern or is it the exact same pattern? I mean, it's the same thing. Huge bull candle, inside indecision candle, inside indecision candle. It's the same pattern. Now the colors are a little different, but the sentiment is the exact same. Bull candle on a gap down, bull candle on a gap down, next candle, indecision candle, next candle, indecision candle, the exact same pattern. So does Elizabeth get in bullish again right here on the green line? Yes, she does. Does she put her stop loss down here just like she put her stop loss down here? Yes, she does. How quickly did she find out last time that she was wrong? In about 15 minutes. How quickly did she find out that she was right on this trade? In about 15 minutes. The cool part is with fades, you'll normally find out within the first 40 minutes if you're right or wrong. Brett says, is this the same strategy you take with blue chips? Yes, sir. Like McDonald's today. McDonald's today, pulled up, man, perfect gap down fade. So really, really nice trade, great fade, good breakout. And here's the thing, let's say Elizabeth wanted to wait for quote unquote confirmation. She wanted to wait for this candle to come in. So she waited for the bullish candle to come in and close above the resistance. Could she have taken a limit buy at the top of this candle with a stop loss down there? And the answer is yes, right? So Elizabeth loses $1,000 over here. She lights it on kerosene. And over here, does she make her money back and then some? Yes, she does. Now, does Elizabeth sell right here because she's a giant chicken bat? And the answer is sometimes, probably. Every now and then, right? Every now and then we all turn into chicken bats. But if we're not a giant chicken bat, the trade begins working immediately and then the gap fills. So when the gap does fill, Elizabeth takes a partial. She exits maybe 1/10 of her position, takes your stop, moves your stop up a little bit, holds, and sells right here. Why would she sell right there? New high. Yep, I agree. Previous resistance. Yep, I agree. Nick says run of bull candles and a volume spike. There's my boy Nick paying attention. Look at the volume. That's the second, well, let's say the third biggest volume of the day. Who's buying right there? The newbies are buying there. You! You're buying there a few weeks ago or a few days ago or a few years ago. That's where you're buying, right? JS, you said that you're a chaser. So he's waiting and waiting and waiting and waiting. And it's like, okay, now it's bullish. And then you get in and it goes up a little bit. And then this is the confirmation. We have 97 bull candles in a row. It's just gone straight up. Now's the time to get in. Right? So yeah, volume spike, gap fill, and big important question, does Elizabeth make more money on her second day than she lost on the first day? And the answer is yes. Also, what day of the week did this come on? The 3rd was a Friday. 6th is a Monday. Boom. So she played it on a Monday as well. Probably looked at the weekly chart, got some sentiment there, and soiled it. Good job, Elizabeth. Well done. Now, the other sentiment that happens from here is you get tons and tons and tons and tons and tons of buyers. This is a very, very good trap because I can look at that and go, yep, all the noobs got in right there. So once we go lower than this candle, right, lower below the low of the bull candle, I can literally set up a short trade to get in there with a stop up here somewhere. And I get filled, trades lower, I exit a partial, retraces, trades a little bit lower, I move my stop down to here, I exit another partial, flag pattern, it breaks down, I exit the rest of my position, and now I'm profitable on 2 trades. I took a long, and then I took a short once I realized that people were trapped. For me, I'm a $1,000 risk trade. I'm $1,000, so this is probably $1,800. That's probably at least $1,200. So I've traded 1 stock, and I'm up around $4 grand on the day. Then you get a really nice Morningstar reversal down here. It trades sideways forever and forever and forever, starts breaking out, and now you have what? Now you have a giant S-curve. Can you see the people that shorted right here? The answer is yes. And check out this craziness. It almost pulled right back down to the opening range breakout anyway to go long again. So the same people who went long there last time almost got a chance to do it again. So when they saw that they missed it by a few pennies and the stock trade higher, they get in bullish around here somewhere and then just ride it back up to that resistance right there and sell. Now, can you feel all of the buyers in on this trade? Can you look at the chart and go, man, tons and tons and tons and tons of people are buying this thing. Look at this, buy, 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 buy. So is it any surprise that the next day it gaps up? What do? This stuff is not hard, ladies and gentlemen. It's really easy. This is second grade math stuff. Like, it's just look at the chart. You know, take 5 minutes to read the candles. And even if you don't know what you're doing, one of my spiritual mentors and guides, she always tells me, even if I ask you a question and you don't believe in what I'm asking you, because she was asking me about past lives, and I'm not going to get into the whole thing about past lives right now, but I'm still working on really trying to figure that part out and just think through some stuff. Long story short, she's like, hey, listen, you don't have to believe in anything, but just say whatever comes to your mind. And even if you think that you're saying crazy, insane things, say it anyway, and then we'll discuss it and diagnose it after you say it. I was like, okay, I think that's pretty cool. So I start talking through it. I start saying some things. I'm like, that definitely sounds crazy. This is the same thing. This is the same thing. So when you're looking at a chart, even if you don't think you're even remotely correct, say it out loud, talk through it, and start building that practice, because your job depends on this. If you can read candles like a book, which I can, you can make money. And if you can make money, well, that's why you're here. So it's pretty cool stuff. Make sense? And then check it out. When we retrace, we gap up, we retest, and we trade right back into old resistance, new support, and go long. Cool, cool, cool. I love trading so much. Now, let's go back out to the daily chart. Do we know what's going to happen the next day? No, we don't. We're not fortune tellers. If the stock gaps up, how will the most recent traders feel? Well, who are the most recent traders? Duh, bears. What type of candle is the most recent? Bearish. What candle is the prior? Which candle is the prior candle? Bearish one. And then, is this a 2-day consolidation? Everyone is saying yes. Are you sure? Are you 100% confident that this is a 2-day consolidation? Everyone's like, I think so. The chat pane got crazy quiet. Oh. The answer is yes. Sometimes I just have to ask to make sure you're 100%. Be 100% correct, even if you're wrong. That's a Jeremy Newsom quote. Just say yes. Like, yeah, absolutely. 100%. It's gonna, that's what it is. Oh, it's not? Okay. That's all right. Then you lose. So this is absolutely. So everyone, type in 100% to the chat pane. 100%. This is definitely 100% a 2-day consolidation. The reason I'm really focusing on this is my favorite type of gap. If I see this, if you see this, let me know. When you subscribe to the real life day trading or some afternoon trading room, you see one of these things, hit me up. Do I trade all of them? No, but will I trade them? Absolutely. I mean, you have a 2-day consolidation with bear candles and we're gapping up the next day. This is a wrap. I'm trading that thing every day. So this is a bullish gap and go. This one just happens to be breaking out of a 2-day consolidation, but there it is right there. Now, does the candle have to be white in order to be a bullish gap and go? Oh, don't know what just happened there. So does the candle have to be white to be a bullish gap and go? The answer is no, it does not. It closed white, which is cool, but even if it was a bear candle gapping up into a bear candle, it'd still be a gap and go, and there'd still be a lot of bullish sentiment there. But I love this gap and day trade approach. The bullish gap and go is when you have some bear candles that are gapping up. Simple as that. Bear candles are created from short sellers and from people who sold early to lock in profits. Short sellers have to buy to cover to exit for a loss. All of that buying to cover can drive the stock higher. Michael says, was that a shave top? Almost perfect shave top. It was like 2 or 3 pennies away. But I'm glad that you asked, Mr. Holt, because it's even stronger as a shave top. But yeah, it's pretty much a shave top. So what's interesting is when that gap occurs, you're already in a bullish trend. Do you think that maybe you would have the understanding of the application to go, all right, let me buy some call options, or let me buy some shares, or let me sell a put, or let me do a bull put spread, or let me do something bullish to make money if it goes higher? And the answer is yes, because you're stacking all these things on top of each other. Like, yep, looks good, looks good, looks good, looks good. So this is one that I played very recently. Now, is this a really nice, perfect 2-day pennant pattern? It's like, yeah, you got some nice consolidation. You're definitely within the range of the bullish candle. I wouldn't call it a perfect 2-day pennant pattern because this candle technically is not inside of the first candle, but it's still a nice consolidation, right? There is definitely a consolidation here. It did break out of a 2-day consolidation. It just wasn't a perfect 2-day pennant pattern. But that's okay. I still traded it, and we're going to talk about how I did it. This was a really profitable trade, by the way, too. This was a nice trade. But can you see that you're gapping above multiple days? Yes or no? Right? Yep, you're gapping above multiple days. Are you gapping above bear candles with bear volume? Yes, you are. Is the trend already bullish? Yes, it is. Are people trapped? Yes, they are. Do you know the trade's going to work? No, you don't. Okay, cool. So you put in all the statistics, stack all of your knowledge together. You're looking at the trade. You're like, okay, it's a bullish gap and go. Got a consolidation. It's a very small gap. This is how I traded this stock. This is how we trade this stock together. This is a 3-minute chart. This is a screenshot of the setup that we took in class. So I had lost a full risk unit, which is $1,000 on a previous trade, which is Johnson & Johnson. And so I was trying to make more than that on this particular trade, which we did. So this is the 3-minute chart. And what I did on this trade was you had 3 bull candles in a row. And so I know it's a gap and go. I know it's a strong candle, but look at the size of these candles. So what I was doing is I was saying, okay, well, instead of me buying here, I'm going to set a limit buy to get in on a pullback, pretty much at the previous resistance levels. When I set up that limit order, did I think or did I know I was going to get filled? I thought I was going to get filled, but I didn't know I was going to get filled. What if it just kept doing this? I mean, has that ever happened to me before? Hashtag Alibaba. Have I ever gotten into a trade, set it up, and it just never pulls back? Yeah, literally every day. I mean, honestly, it happens every single day. So when this candle comes in, does it have a lot of bear volume? Yes or no? Yes, it does. So when it closes above that bear volume, how do these people who sold short or sold the stock to close their profits, how do they feel when it goes above that? They felt like a giant tuna fish sandwich. Yeah, they didn't feel great. Sad panda. They were a sad panda. Really random, totally random thing. But someone said that my sad panda drawings was racist. in a video at some point. I was like, really? And they're like, yeah, because it has the chink eyes. And like pandas are supposed to be Chinese. I was like, dude, you're looking way too much into this. Number one. Number two, this is how my eyes naturally look when I smile. My eyes go really like squinty. So what are you gonna, I mean, I don't know what do you want me to tell you? So every time I was a little kid, that's how I drew smiley faces or sad faces, because that's how my eyes look when I smile. So boom. I don't really cry. I sprinkle. I see everything in like flat screen, high def TV. So anyway, that's what I was telling that person on Yahoo, YouTube. And I don't really care when people make fun of me. People make fun of me all the time, but I thought that was just a random statement to break up the class. All right. So anyway, long story short, I set up this limit buy to get in. Notice that I put my stop. Notice that I put my stop below the low of the day. Was this a relatively conservative stop? Yeah, of course. It was pretty conservative. I mean, my entry was 213.31. My stop was 210.31. So it's a $3 stop. So it's relatively conservative. And when you see the old stop, when you can see the line at which I drew it, that's where I actually moved the stop loss. So I didn't move my stop loss for the very first time until this candle came in. I waited like 30 minutes to move my stop. Have you guys ever heard me say that before, that I normally wait about 30 minutes until I move my stop? And then I waited another 20 minutes to move my stop again. And then I waited another hour to move my stop. And then I waited another hour. And then I waited another hour. And then I moved my stop again. And then I hit my target later in the day. Conservative. You can get aggressive after you make money. How about that? Now, I didn't place my entry exactly at the high of the day, like right here, with a stop right there, number one, because that's a pretty big risk reward at that point. I'm talking about $3.50. That's pretty large. Number two, it's a kind of an expensive stock, so I figured, you know what, let me just throw in a limit buy just in case you get some kind of random selling. So it has a pretty large move, so the risk reward wasn't amazing. I've back traded this one a few times and actually felt like I could have made my entry even better. So this is the 2-minute chart. When I back traded on the 2-minute chart, I said, dude, you are a happy panda. But why did you not take this high wave candle? I mean, that's exactly what I talked about in the last class. So why didn't I put my entry here and then put my stop right there? I don't know. That's what I should have done. Would have saved me an entire dollar. And by that point, I could have exited an actual partial up here and then sold the rest up here and made a little bit more on the trade. Now, am I being too critical? Yes and no. I mean, you can always go back and try to get a little bit better at what you do, but I was not looking at the 2-minute chart at that exact moment in time. At that exact chart, I was looking at the 3-minute. Should have looked at the 2-minute. It was a very, very nice gap and go. But long story short, very nice high wave candle. Could have put my entry there. And once this hammer candle came in and this candle came in with almost the exact same wicks, I should have lowered my entry even to here. But here's the funny part. When this candle came in, this was the only selling candle. So even though it sold off, that was a 2-minute candle. And then ever since then, what did it do? As soon as that candle came in, it started bouncing. That was the only selling candle that we got filled on. Always think of stocks like houses or candy bars or cars or anything else. When the stock price goes lower, you should want to buy it more if it's a good company, if it's in a good neighborhood, if it's a good house, if it looks pretty, right? Do you want to buy your house at $214,000? Or do you want to buy your house at $212,000? It's like, obviously, you always want to buy your house for less money. Any questions on that? I'll pause here for just a moment. Matthew says, I wonder how you see any selling at all with so many shorts trapped. True, but you did get a really big bounce. I mean, this thing went from, let's say, 211 to 214 in like 9 minutes. So someone is making $3 a share from here to here in 9 minutes, and they need to sell. I mean, that's realistically it. Plus, that's just the natural order, right? You get this, 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 this. Like, it's a very, very common pattern in day trading. Extremely common. In fact, that's exactly what Salesforce did. I didn't even realize I was drawing kind of what Salesforce did. David says, do you recommend moving averages? Stick till class 4 for moving averages, David. All right, cool deal. Sounds good. Looks good. Feels good. All right. Here we go. So my most common trade, is taking the breakout above bearish high wave candles. That's what I do the most. And I play them on 2-minute charts a lot on great gaps. I play them on larger time frames on good gaps. I play them on 2-minute, 3-minute, 5-minute. That's my candle. So again, if you want, like, what does Jeremy Newsom normally do? That's it. You're looking at it. Take a screenshot. I look for that candle very frequently on good gaps, and I play that candle. 2-minute, 3-minute, and 5-minute. I'm not special. I mean, I have an amazing beard, but that trade is just, you just have to take it. You got to play it. Okay, cool. So back to this chart, back to this trend. So Andrea, this is going to answer a lot of your question anyway. So the trend, is it up or down? Right, still up. Everyone knows that. Do we know what's going to happen the next day? No. Do we know the color of the next day's candle? No. This is a selling and bearish candle, right? Absolutely. People are locking in profit. If the bear candle gaps down, how the bears close their position, they will buy to cover. And again, you have another flawless bullish fade on a bearish retest gap. Right? Bear candle gaps down, gaps into a strong trend. You got to fade. And what's really cool is you get to see perfect sentiment on this one. Black candle gapping down, which is a bearish retest gap. Here's the retest. And here's the gap down again, right back into the exact same spot that people were buying the first time. Wow. Oh my goodness. So are you telling me that you have looked to go on bullish on that day, waited for the bear candle gap down to fade, and then if it got back down to that support again, play it long again? That is correct. Amazing stuff. Amazing. Now, check this out. What would occur if this gaps up the next day? What type of gap would we get? It would be a bullish retest gap, right? Yep, you're correct. Now, if it opened above here, give me the sentiment on a 1 to 10 scale. 10 being redonkulously bullish, and 1 being I wouldn't buy that with my inheritance money. That's a 9.8976999, repeating forever. That is an amazing gap. It would be a 10 out of 10 if the wick on this upper shadow is a little bit bigger. That's a phenomenal, phenomenal, phenomenal gap. Look how many wicks it's clearing. And do you think that there are bear traders from this candle, boom, who shorted the retest, who want this to happen? And the answer is yes, right? That's what they want. That's what they expect. They're like, yep, that's going to happen. So if it does, great, play it bearish. If it doesn't, you should be able to look at this chart and go, oh my heavens, I actually need to call the emergency room because all those people are so trapped and upset and frustrated. They're going to be mad. Does my health insurance cover that? Like, you should call your health insurance provider and find out if they're covered for that kind of trappage. I mean, that is brutal. Look at those upper shadows. Plus, you're doing 1, 2, 3, 4, 5, 6 days on one super small gap. And you almost got a tweezer top right there. Trappy McTrapperton. Look at that. Look at that candle. Oh my goodness. Whew. It's like if an angel himself came down from heaven and was like, hey, dude, do you want to make some money tonight? Well, look at this. I mean, I dream about that gap. Look at how cute that retest is. Now, that's the small retest in the pink circle. Type a 4 into the chat pane if you can see the larger retest. I'll highlight it in the green circle. Larger retest happened a few days later. John says, where would your entry have been? Same exact as every other retest gap, John. If you want, go back trade it. February 2nd, I believe, on PayPal 2020. Zoom into the 5-minute chart. Take a breakout of a high wave candle on either the 5, the 3, or the 2. Same thing we've been talking about since module 1 and in tonight's class. Let it retest, wait for a high wave candle, hammer something, and then get it above there. Tyler says, what makes it larger? Multiple candles? Yeah, exactly. So you have a small retest and then you have the larger retest. Larger in price and time. And then we went higher. Now, what's interesting about this one is this another beautiful, I mean, another one, bear gap down into a bullish trend and people buy it and made the stock go higher. Yep, sure is. Right, another bearish retest gap down into a bullish trend. That is a bear fade, beautiful thumbs up, looks gorgeous. Fady McFaderton. David says, you still trade bearish retest gaps long if the overall trend is bullish. Yes, sir. Go with the overall trend always. Yeah, we'll talk about that in class 1. Always go with the bullish trend. So here's an interesting question. What is unique about this gap, though? There is something a little unique about it. What's interesting about this gap is you could actually draw a line between this gap over here in the purple and this gap right here. This is an interesting gap. This is a large gap. It's very similar to this one, but it's not a really massive cause for concern yet. When would it be time to call your grandma and say, hey, grandma, might want to buy some puts on PayPal? Right, there's your trend. Look at the trend. Is the trend still bullish? Yes, it is. What happens, though, if we take out that candle. Now, again, I don't know if we will or if we do. Who knows? Maybe we do, maybe we don't. If we trade up, good, play it bullish. I mean, we've done that before over here and over here. I mean, it's worked out the exact same way, but this is you had this gap, which is big, you had this gap, which is bigger, and then you had this gap, which is really big. What happens if we take out that candle with that volume and that trend line? Are we going to get some selling? Yeah, most likely. Could you either go, all right, I'm either going to trade it bearish, or you simply just don't trade it aggressively bullish? I would say yes to both of those things. So, oh, I didn't have that in here? Oh, give me 1 second. I could have sworn. There we go. Just got to move that slide up. Okay. Back to your regular scheduled programming. So this is what happened the very next day. Did PayPal take out that bullish candle? Douglas says, Dumpy McDumperton. Yes, pretty much what happened. The very, very, very next day, we took out that candle. Everyone is trapped. Everyone who bought off of that trend line is losing money. They all get stopped out, and that is a trend reversal gap. Now, granted, that was also COVID. I get you. That's fine. But it doesn't matter what it was. It's still this happened before March on PayPal. So you had an island reversal, you had warning signals, you had a bullish candle, and then the very next day, boom, we closed below that bullish candle, took it out. So everyone who bought on that day is trapped, the gap remains open, and you had a bear party because it finally had a bear candle gap down, and they absolutely got that retest. They finally caught it. Andrea says, when you say took out, it doesn't mean breakout. So when I say took out, it means that the stock price goes lower than the low of that candle. So it took out the price. Yep, it went past the level, went past the support, and went below the buying. It trapped all the bull traders. Yep, exactly correct. Cool. Very, very cool. And again, that's just a lot of sentiment that you can begin to build as a day trader. So trends begin to reverse because of gaps. That's what happens. When you are looking for a trend reversal, if you are bullish, 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 that's fine. But when you start getting some really interesting and intriguing gaps, that's when you can have trend reversals. Okay, keep an eye out for the volume to get taken out, for price to go past a certain amount of volume. Draw some trend lines and angles every now and then. If we break out those angles and those trend lines, this can work on all time frames, by the way. Right, look for lower highs and lower lows. If you start getting that, very good sign of trend reversal. Higher highs or higher lows if you're reversing from a bear to a bull. And then, of course, how many people are trapped? If you can look at a chart and you can clearly see that tons of people are buying, or tons of people are getting in, and tons of people are in somehow or some version or some way, then you get a really delectable piece of intel. Now, print out this chart, study it. This is probably the most important chart in today's class. I randomly came up with this rating system last night. I had to sit down and go, man, how do I rate these gaps? And what I did is I went through a lot of my details, a lot of my data, a lot of information, and the ones I perform the best on are A's and A pluses. The ones I do all right on are the B's and the C's. I mean, you can pass college with B's and C's. Trust me, I did it. Okay? So you can make money on B's and C's. And man, maybe if you're lucky, you can even do some D pluses, but I don't really trade F gaps. I'm not saying I don't. I'm just saying really rarely. If you want me to trade a 25% or more gap, come to the day trading room, ask me to trade it, give me some money to trade it, and I'll trade it for you. Right? I'll trade it with your money. But really, that was an exaggeration. I will watch it most of the day, but I generally don't do anything on those type of gaps because they're just a little too large. Now, why sentimentally does it not really do much on those gaps? And it's because buyers are like, should I sell? I'm up 25%. What if it goes higher? It's going to go to 40. It's going to go up to 100%. I'm just going to stay in this thing. And then bear traders, you know, if the stock is gapping up, bear traders are saying, well, I'm a sad racist panda, and I guess I'm just going to keep holding this position because I'm down 25%. How much more is it going to get? Right? Can only get so much worse from here. So they just keep holding. And on the flip side of that, right, if you're in a trade bullish and it gaps down 25%, I mean, buyers are going to be scared. Yeah, they're going to panic. Yeah, they will sell a little bit, but I mean, grand scheme of things, they probably will double down. They'll get emotional. They'll buy more. They'll dollar cost average. They'll bag hold. And then shorts are like going to keep pounding it because they're up so much. So I'm just saying 25% plus gaps, I generally don't trade that well. That's not my specialty. You can make a lot of money doing these. And when the market is a little bit more range bound, you can make a lot of money doing these as well. But yeah, there's your infographic. I hope that helps. So those are the gap percentages that I look for a lot. Now, what do you guys think? Can I trade gaps that are gapping less than 2%? And the answer is yes. I do that all the time. It just requires a little bit more finesse. So you can consider 0 to 4% as an A plus if it's just the perfect open. Just the perfect open. Yes, sir. I'll be there in just a moment. I'm in the day trading room, class 2 right now. All right. So that is the gap percentages. So what is the trend on this particular stock? Trend is bullish. Right. Trend is very bullish. A lot of buying, a lot of good trends, a lot of powerful moves. Right. You have a lot of buying up here, and then boom, this is the bearish gap and go. This is a great one when it actually works. When there's a lot of people trapped, when you can sense and see and feel that there are tons and tons and tons of people buying, this is when you trap tons of buyers and people are losing a lot of money. Here's another example, right? For bearish gap and goes, for bearish trades, I really like traders who have to be scared and bears need to be excited. So buyers need to be panicking, bears need to be panicking, bears need to be panicking of excitement, bulls need to be panicking in general. So you should have a blend of profitable traders who are exiting their position for a gain, people who are recently bought high who are now getting hosed, and exciting bears. You want all of those for a good gap and go. So people who bought high, that's a good one. So I can look at this chart and see that you have upper wicks and people who are buying there, and you had a really, really good gap down, right? Breaking the trend line. You can see the trend line breaking. You can see the buyers buying up there getting trapped. You can see the fact that we're gapping down below all that support. Phenomenal, phenomenal gap. And again, you got a gap and go here. Great gap and go. You had a retest gap right there. Bear retest gap. It gapped down, retested, and went lower. You got a phenomenal bear gap and go over there. That was like a 25% gap. It retested a little bit and then went lower. A lot of amazing gaps on every single stock, and you can review it over and over and over and over and over. So people say gaps always fill. You know, sometimes they do, sometimes they don't. We can go look at a few examples. Let me pull up some stocks. What do you guys? What's a good stock out there you guys want to look at? Well, actually, let's just go look at some today. DocuSign. 1 to 10 scale on this gap. How would you give it? 1 to 10 scale? Yeah, it's a 10. I mean, it cleared all the pivots. It's in a bullish trend. Everyone knows exactly how DocuSign makes money, trapping a bunch of bears. It was gapping at open, I think, 8%. So, you know, B plus, open, perfect retest. Here's your 3-minute chart. So if you're playing DocuSign, do you have a bullish candle at any point in time to play? Right, there's your hammer. There's your hammer. Ken says, if you have a previous day black candle and you get a gap up, but it doesn't clear the black candle open, do you like it? Sometimes, but I really prefer it to open above the high. Zoom, I didn't trade Zoom. Why didn't I trade Zoom today? I didn't trade Zoom because it was up 40% at open, so I didn't really know what to do. So I didn't do anything. It did retest. You can see that it retested. You did get an opportunity to buy a dip if you really played it well. You could have absolutely made money on Zoom today. I just didn't. It's a phenomenal, phenomenal play. Gorgeous retest, incredible trend. Absolutely could have made money on Zoom today. I just did not. Okay, CrowdStrike, another really good gap. So here's CrowdStrike, right? Gapping above some pivots. It was a very nice retest gap because this is an all-time high. White candle gapping up. Had a really big retest because yesterday was such a bullish candle. And here's the 5-minute chart, and here's your retest right here, right? Pre-market, you can see it pulling back into old resistance, new support. That green line is 130. That was the exact low of the day. That's what I drew before market opened today. I was like, hey, if you're going to play it, buy the dip down there. There's your one white soldier. There's your bearish hammer entry there. Stop somewhere over there. Boom. Making good money on CrowdStrike. Great gap. So do gaps always fill? The answer is no, not always. I don't expect this gap to fill on Pinterest. I don't think this gap's ever going to fill. So Pinterest, I think Pinterest is just going to go higher. Tesla, I don't really expect this gap on Tesla from split down here in August. I don't think that ever going to fill. You have tons and tons of gaps. I mean, Google has a myriads of gaps they're never going to fill. This gap down here back from April 11, 12, that's never going to fill. All right, so Google just going to keep going higher. JD, great gap today. Bear candle gapping up, trapping some people. Alibaba had an amazing gap. 2-day consolidation, 2-day pennant pattern, and Baba gaps up above the high of yesterday. Easiest trade I've ever seen in my entire life. So ladies and gentlemen, if you like what we're doing in this class, if you like this program, you will love this course. Go to reallifetrading.com, click on online courses, and then click on back trading course. Back trading is straight up legit. It's 6 hours of 100% sheer awesomeness. Awesome is my name spelled with an N in front of awesome. It's really, really great. It does cost a little bit of money, but if you like trading, if you really like me, my 100%, just full on crushing it, kicking butt, taking names, go take that class. I think you'll like it a lot. Other than that, what questions do I have from the audience, ladies and gentlemen? Awesome. 5 minutes. Huberto says, do you set up before market opens every day and make your adjustments during the day session? Yes, sir. Albert says, worth every penny. Thank you. Cabria says, how were you trading today? I did really great, man. I had some amazing trades today. Nice, cute, profitable day on the long term. Cabria said, DocuSign did amazing. Great job. Hope you smashed it. Heidel says, how do you determine your target if the stock is trading near all-time highs? We'll talk about that in the next class. Pat says, can you analyze Square today? Square is a nice white candle gapping up, retest gap, buy the dip. That was it. Very easy. Square was very simple. So there's literally your 3-minute high wave candle right there at open. There's the retest. There's the break above the high wave candle. That's when you get in and sell when it goes higher. So Square was real easy. In fact, we did play Square officially in the trading room today. And this was the trade that we set up for a bunch of traders on Square. So Square, that's the daily chart. Sorry. Let me go to, this is the intraday chart. So that's the trade played on Square. That's the 5-minute bear candle, just playing the breakout of the bear candle on a 5-minute chart. John says, when you have a gap, do you plan your entry after the gap? Because I'm struggling with my entries. John, go back and rewatch class 1. You plan the gap, the entry, before market open. So before market open, you already want to know how to play the gap. And if you struggle with your entries, John, you should honestly just pop over to reallifetrading.com and join the day trading class. Let us help you with your entries. It's worth them. If you want to do it for a month, you can do it for a month, you can do it for 2 months, but go to live trading, RealLifeTrading.com, click on Right. Just trade with us. I'll help you with your entries on the microphone. I'll say, hey, man, this is what I would do. This is where I would get in. This is why I would get in there. Michael says, out of the box, do you ever deal with an IPO? Yeah, I love IPOs. JPEV hasn't IPO'd yet, apparently, but once it does, I'll trade it a few days afterwards. So yeah, man, I like it. Rich says, what is the best way to identify gapping stocks? Or do you have a list of stocks that you look at every day? So Rich, go back to class 1. I know you said you did not watch that already. So go back and watch class 1. I will answer that question in class 1. The other thing that you can easily do, very simply, is you can go to barchart.com. This is the link right here. You can go to barchart.com, and it has a pre-market gap scanner that you can go through every single day. It opens at 9 a.m. Eastern. Option Man says, can I watch this again? Only if you have internet and you want to. Daniel says, I have to go. The room tomorrow is going to be my very first day. Nice. Well, welcome to the club, my friend. It's going to be fun. I'll be there tomorrow, and it's going to be a party. Mel says, how do you go back to watch class 1? I thought you guys all subscribed to my YouTube channel. Well, if you go to Real Life Trading YouTube, it's right here. Very first video, can't miss it. Here it is. So I will copy and paste that and throw it in the chat pane. But yep, so it's right there. Very, very front home video. First one out. Very noob friendly. Yes, that is correct. Rich says, I'm doing a smiling panda, but I'm not racist. You have opened my eyes and given me hope. I love it. Amazing. Matthew says, almost every question I had for you has been answered in these courses already. Well, beautiful. I am doing my job then. I love it. Guess what, folks? Did you know that there's a class 3? Yep, class 3 tomorrow. Same time, same place. If you want to be here live, it will start at 6:30 p.m. Eastern. If you're watching the recording, thank you for watching the recording. Thank you for visiting our website. Thank you for helping me enrich lives. You guys are absolutely amazing. You're incredible. You're fantastic. You're terrific. And until next time, love life, live life, and trade it.